I have gone the full journey from left to middle to right. I'm not always right. I'm not always on the right side. I'm not always the Jedi Master. But what I've learned is never be the mid-twit. Be the guy on the left who simplifies it all down to, well, crypto's going up. The guy on the right would be, well, crypto's going up, which is your thesis, like I put out a tweet today. It's like, don't fuck this up.
Yeah.
Just if the space is going to $10 trillion, just buy it, right? The people in the middle are arguing about, well, it's decentralized, it's not decentralized this, and there's regulation, and oh my God, inflation, and can't you see what's happening to the economy? But the two people on the far left and the far right have it simplified down. The difference is the person on the far right understands all of the arguments in the middle and everything else and is distilled down to that one essence. Aim to be that person, or if not, aim to be the person on the left. Because it's really the money of crowds that moves things. So if the crowd believes it to be so, it is so, which is why I saw some brilliant people trade Doge so well, because they understood that the power lay on the people in the left. So they would put, maybe the meme would be, the people like Doge, or the people like dogs. The left is that, I want to buy a dog token. The right is the people like dogs. So
Yeah.
you want to. So it's seeing that, not getting involved in all of the over-intellectualization of the space. And that really applies in macro, crypto, everything. People want to sound smart. And sometimes the way of sounding the smartest is to sound very dumb.
Hello and welcome to Money Talks. In today's video, Raoul Pal gives us an update on his current macro thesis and his perspective on current global market conditions, also his prediction for Bitcoin and crypto, and where he thinks the market will go in the next months. So let's get started with the video.
So if it priced in the recession early, let's assume we're somewhere around recession point now, then crypto's job is forward-looking to start discounting a recovery and liquidity and central banks printing money or rates being cut. Equity markets done the same. What people are making the mistake is they're being very mid-curve. They're saying today inflation is at X. Well, where is it in the future? Today growth is Y. Where is it in the future? Today the central banks are raising rates. Are they going to be doing that in the future? People argue about today as if that's what matters for markets. But really what matters for markets is what it does in 6 months, 12 months, 18 months. And good macro people live far out into the future where you know it's fuzzier and then you try and get closer to now. So 6 months visibility of what the economy is doing. And my forward-looking indicators suggest the economy bottoms very soon by the forward-looking stuff. And that means that it'll feel sluggish and not great for a while. And the markets discount this fast. And we've seen this. On my work, the NASDAQ should be at all-time highs next 3 months. I mean, that's staggering because it had a big fall. And, yes, some of these things that really got beaten up will have, 300% years. I love these times because everybody is now macro mid-curve. And really you want to simplify it is things are going to get better right now. Last year, terrible.
Yeah.
But everybody, even bonds, normally bonds do all right. Bonds blew up, equities blew up, crypto blew up, everything blew up. What more do these apocalyptical people, doomsayers, want? They had it last year. They kind of want it again. And that's actually a behavioral bias based around the narrative that they want to see. They want to see the central banks punish the markets. They don't like to see markets rise because they want certain things to be true. So you have to filter a lot of these kind of things out. It's people's kind of emotional behavioral insecurities that spread out all over the place.
Bitcoin was stuck just below $30,000 early in Asia Wednesday as investors awaited the likely resumption of the U.S. Federal Reserve's rate hike campaign. Dogecoin surged 7% amid optimism about what Elon Musk's latest moves at Twitter mean for the meme coin. BTC zoomed above $30,000 about a month ago after finance giant BlackRock's application for a Bitcoin ETF spurred speculation if the world's largest asset manager wins regulatory approval, could funnel large amounts of money from conventional investors into digital assets, but it's been stuck around that level ever since, partly due to worry about the Fed's looming July 26th decision, a likely 25 basis point BPS rate increase. Inflation and rate concerns could be what has been keeping crypto prices depressed, Noelle Acheson wrote in her Crypto is Macro newsletter Tuesday. Bitcoin had tumbled below $29,000 at one point Monday, its lowest level since June after the Wall Street Journal reported that Binance CEO Changpeng CZ Zhao had suggested in a private conversation that the crypto exchange's affiliates had conducted wash trading several years ago, and China's policymakers warned of a tortuous economic recovery. The Monday BTC drop was sharp, which normally suggests a programmatic sale, Acheson wrote. These usually recover relatively quickly, but the new lower BTC level seems to be holding, reinforcing the idea that there are just not enough new buyers ready to take positions yet.
I've made that mistake. We've all made that mistake. Remained overly bearish because we've had PTSD. My worst year ever was 2009 because I even ignored all of my economic work, all of my work, because I knew that it was all going to come to an end in an even bigger way. Obviously, I was wrong, and I screwed it up badly. It stopped me even being able to buy equities for a long time because I just always had the fear that it was going to go wrong when the answer was just buy equities. Right? I was really mid-curving the whole thing. And in 2020, I got it right. So I closed all of my equity short positions and stuff and went long crypto and other stuff. Didn't buy much equity because I've still struggled, but I knew I had to learn to do that because this is my own behavioral bias.
Yeah.
And I managed to start averaging in technology stocks over the summer and then really pulled the trigger on everything in November, December, January, February, March, and got the whole lot. I mean, got the NASDAQ and Tesla and Apple and semiconductors and the lot because I finally got over my bias. Because my forward-looking indicators were giving me everything I needed to do. I just needed to drop that bias, the PTSD bias, and say, my time horizon is longer. I know what I'm doing. Stick with your work. You've been doing this a long time. Buy. And it worked. Investing is all about us being our own enemies.
Yeah.
The narratives we spin ourselves are dangerous, which is why people just need to educate themselves a bit more on learning how to have an independence of view that can head check your narrative. Your narrative may be right too, right? I'm not saying that everybody's narratives are wrong. You can be really right, but you just need a way of head checking whether you're far away from what you can prove to be true. So there's a very strong narrative now, which is super interesting to me, which is inflation is coming back. This is only the start. Now, I have yet to see anybody put together a chart or any data to show that is the case. What they're anchored on is the 1970s. And what you find is there's actually a political bias that splits with the inflation view. So people who are more conservative in the United States tend to believe inflation is coming back. People who are more liberal don't believe that to be the case. Interesting. So there's a bias written in that whole thing. And it's about the worshipping of Volcker as the hero who broke it, and the markets must get down to P ratios of 6 to be worth investing in. Everything else is a bubble. So there's so many cognitive biases in this. This is the strongest one I've seen in a long time. And I asked because I do an enormous amount of work on this kind of stuff, and I can't find any evidence of a bounce or rebound in inflation. I don't discount it as zero probability, but assessing the probabilities looks pretty clear to me. And I asked them, well, show me somewhere that you can show me with some forward-looking data where they don't have it. It's a bias. It's a narrative bias. And again, it doesn't mean I'm right, but I'm saying probabilistically, if I can show you 10 pieces of evidence why it's highly unlikely and you can't show me one.
So what's your price prediction for Bitcoin at the end of 2023? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.